Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Monday, there are no important economic headers to be released from the United States. It's only the 3 months and 6 months bills auctions, which is with low importance from the European Union. There are some important economic headers. Watch for it. That's all. We'll move on now to the numbers. On the last trading session of Friday, we have had a trading range from 1503 to 1521. Numbers are rounded and the market is closed. Gold spot printed a close price above 1512. On the last trading session of Friday, the number is rounded and the market is closed. Gold is trading in a bull trend above its all daily simple moving averages, and as we see, the 20 days daily simple moving average is as close as 1468, and gold is bullish as long as it's trading above 1436. The 50 days EMA. We are overbought on the weekly, monthly, and daily charts with high readings and supports at seen at 1506, followed by 1497, and the resistance levels it's seen at 1518, followed by 1527 and 1534. That's all for the numbers. We'll move on now to the trading strategy. I've been asked recently why gold and the US dollar rallies together. The normal response expected from gold when the US dollar rallies is that the gold moves sideways. Now I have answered this, but maybe my answer wasn't direct enough. Both the gold and US dollar at this state, they are rallying for one purpose, safe haven purpose. So when the financial markets are in some sort of panic, the demand for the treasury bills increase, which will increase the value of the US dollar. And when the prices increase for the treasury bills, it moves or it drives the yields down, and this is what drives the gold up. Now, what I see in the financial markets, latest moves, that central banks around the world have been taken as hostage by the financial markets. It's either they move forward with the quantitative easing and the rate cutting without any conditions, or a recession could hit. For the United States, different story because the economy is big, huge, diversified, and most importantly, it's independent. The last we heard from Fed Powell that it's a one rate cut and that's all, but the bonds market, the US one, is screaming for minimum of 3 rate cuts, with rising possibility of like 40% that recession could hit the US economy before elections. I anticipate that Fed Powell could lose his job if he's not going to cut rates. It happened in Turkey, and US is not an exception. In our last video, I said buy gold if it passes 1534, and it did not. And I said buy any worthy dip of $10 or more. Gold fell from 1527 to 1517, then bounced back to 1522, then fell down to 1511, then bounced back to 1517, then down to 1505, then bounced back to 1514, then down to 1503, and bounced back to 1515, and closed at 1512. Buying dips usually return $3 to $5. If the market is volatile, you can get $10. But I think it was working for you. Also, I said buy gold around 1500. It moved as low as 1503. It was a very good opportunity to enter the market as a buyer. However, technically, gold is trading in a bull trend. I said we are into a correction as long as 1534 is not cleared yet. Don't be so cute to short this market. Look for a buying opportunity around 1500 or any dip of $15 plus. The move above 1500 is protected as long as 1497 is holding. From any close above 1520 for consecutive 2 trading sessions, count at your fingers or even at the tips of one of your fingers before you are done, gold will be trading about 1600. However, as I say, always gold trades with momentum, and we have a market that is given, not the market that we exactly wish. So any retracement to 1450 is on the cards, and I see it as an opportunity to enter the market as a buyer, and hold and be patient until the market moves back into the right track. I favor the first scenario actually, but as we say, or as I've just said, we have a market that is given, not the market that we exactly wish to have. Uh, Moving on, I am more now interested in silver, which maintained a weekly close above 17. I'm looking for rally in silver with an endpoint of $20 to $22, where silver is going to take the lead from gold and rallies with gold following. I have one evidence on this, that for the first time in the recent rally, silver managed to rally along with the US dollar, which is known that silver cannot rise while the US dollar is rising. This is a clue that is being silver used as a safe haven. Speaking of the services that we do provide along with our daily video, we are running two products actually, the premium package and the imperial package. The difference between the two of them is that the premium package is focused on gold and at times silver, and it's a one-way communication. It means I'm not following up on that channel. Also, recently I've received some requests to join the premium package, which is full right now. So I'm planning to open a new room for premium subscribers. If anyone is interested, please send me a mail to the email address mentioned below. When we have 15 members willing to join that this room, we will open it and make it active. Thank you guys for watching. I'll see you tomorrow in another video.